Hey, good morning, everybody, and happy Friday to you. This is your market update for December 9th. I hope everybody has had a great week so far and is ready for the weekend. So I mentioned yesterday and a couple times this week that there was a key inflation report that was coming out today called the PPI, the Producer Price Index. It basically is a measure of inflation on the wholesale level. So that number actually came out worse than anticipated. There was not as much of a decline as the market was expecting. With that said, it still supports the fact that inflation is declining and we are headed in the right direction, just not as quickly as what the market had hoped. Initially, the market reacted. The stock market was down, I think, over 100 points. So since then, rallied back. The Dow is up modestly, I think 16 points. S&P 500, NASDAQ, both up as well. So all three indexes are all up on the day. Mortgage-backed securities initially had opened down 3 basis points this morning. At one point, we're down over 20 basis points, but currently down only 6 basis points. So I think initially the market reacted in a negative sense because the numbers weren't as favorable as what the market was expecting. But kind of digesting the information more, as oftentimes happens when a report comes out, it's a knee-jerk reaction to the initial numbers. Then you start digesting the information that was included in the report, and it appears to be more favorable than what the initial numbers would look like. And that's exactly what seems to be happening today. The other thing that I wanted to mention to you, the Freddie Mac published 30 and 15-year rates came out yesterday. I did want to note that as of this November 17th, Freddie Mac has started obtaining the information for these published rates in a different way. Instead of doing surveys between lenders nationwide, they're actually using the rates as reflected on applications from loans submitted to Freddie Mac, thousands of them, on a nationwide basis. They're also not publishing points and fees anymore associated with these rates. So we won't really be able to gauge, what the average points and fees charged for these rates are. Nonetheless, we see our fourth week of declining interest rates. The 30-year fixed Freddie Mac rate as of yesterday is down 0.16%, is reflected at 6.33%. The 15-year is down 0.09%, coming in at 5.67%. So continued improvement in interest rates week over week. Not sure what next week will hold. Remember, we have the CPI report coming out on Tuesday, which is the key measure of inflation on the consumer level. We also have the Federal Reserve meeting and a statement by Jerome Powell, the press conference that's made on Wednesday at the culmination of that meeting. So next week, the beginning part of the week should be, hopefully it's good for the market. We'll wait and see. Nonetheless, I hope you guys all have a great weekend, and I look forward to seeing you on Monday.